Ben Westmore is economist of minerals and energy at the National Australia Bank. But, as it's germane at the moment, BP, of course, trying to plug this leak here, Ben. Some signs of success, but, what does it mean for the oil market itself? Is it what happens in the future as people tighten regulation is what the concern is?
Yeah, that's right. So I think that in terms of the actual impact of the BP supply leak in itself is not great, but it's more in terms of the regulations in the future. So for offshore drilling. So if you look at International Energy Agency figures, there's around a 700,000 barrel per day imbalance between production and demand, with production higher. The Gulf of Mexico offshore rigs produce around 2.5 million barrels per day. So all you'd need is for around 30% of the capacity in the Gulf of Mexico to be constrained by regulation, and the global oil market would come back in a balance in terms of the flows. So it is significant, and what happens in terms of regulation is important from here in.
Ben, what about the oil market itself? Now, if you were a trader, what would you be concentrating on right now?
Oh, look, there's no doubt that there is a lot of volatility in the oil market at the moment, and relative to the early months of this year, we expect that volatility to be around for some time as the euro area concerns continue to pervade markets. That said, I don't think the price volatility will be anything like it was in late 2008. But there are definite downside risks at the moment, as well as some upside risks, given how far the oil price has fallen in the last month.
Yeah, you say that there are downside risks there, but does that put your $85 a barrel forecast for year's end into jeopardy? Do you actually at the moment revise that now, Ben?
Look, we're not revising that. That's still our central forecast, although there are some downside risks. But I think that, in terms of what's happening in the global economy, we haven't had a lot of information in the past month that's changed our views. So I think most economists are expecting euro area growth to be sluggish over the next few years, as well as in the US and the UK. And although financial markets have concentrated on public finances, look, I don't think, barring a global financial crisis Mark II, that there's any reason to change our view on terms of the fundamentals in the years ahead.
So we go back to the fundamentals, as you say here, and one of the fundamentals will be in that OPEC report released on Wednesday. What are you looking for from them? Is it going to basically be more of the same?
Look, I think it will be. I think they're going to have a similar view to us in terms of looking through the volatility in financial and commodity markets of the past month. But they may slightly revise down their global demand forecast, just because it looks like the severity of the fiscal austerity packages in the euro area is more severe than what it was last month. But in terms of supply, we don't think that things will change very much. And last week we had Iraq's deputy oil minister saying that oil prices where they are at the moment are unfair but acceptable, and I think that will be the tone in the report.
One thing I've actually noticed the absence of is people talking about the so-called driving season in the US having an impact. And, it's not really been mentioned. Is the market just ignoring that right now? I mean, I know it does sound like everybody just gets in their cars and drives around aimlessly, but it is the summer holiday sort of thing, that sort of thing.
Yeah, look, inventories in the US are still very high, and I think if you abstract from the seasonal influences, distillate stocks in the US are still around 30% above their average of the last few decades, and both gasoline and crude stocks are about around 10% above their average of the last few decades. So on the ground in the US, the supply and demand story is still pretty weak, and there's no doubt the fundamentals are poor.
Thank you very much indeed, Ben Westmore. There is the economist of minerals and energy at the National Australia Bank in the beautiful city of Melbourne.